For years, pensions have carried a strange emotional weight in Britain. They are not just monthly payments, they are reassurance, routine, proof that after decades of work, the system still remembers you, and maybe that is why even the suggestion of disruption lands so heavily, not with panic, at least not immediately, but with something quieter, a kind of unease, the sort of feeling people carry around without fully speaking about it. Because recently, conversations have started circulating around a new banking rule change that could delay pension payments for some people across the UK, not cancel them, not remove them entirely, just delay them. And what's interesting is how a delay can sometimes feel almost as unsettling as a loss itself, especially for people living week to week, bill to bill, direct debit to direct debit. A delay of even a few days can suddenly expose how tightly balanced ordinary life has become. The rule itself sounds technical when explained in official language: additional verification checks, fraud prevention measures, new compliance systems between banks and government payment networks, the sort of bureaucratic wording most people instinctively tune out, but underneath all that language is something much more human: time, waiting, uncertainty, and for pensioners already navigating rising costs, complicated digital systems, and a constant sense that modern life is moving slightly too fast around them, the timing feels significant. And I think that is partly because trust in institutions now feels more fragile than it once did. There was a period, perhaps decades ago, when people assumed systems would simply function. Banks worked, payments arrived, letters came through the door. You did not necessarily love the institutions governing your life, but you assumed they possessed a kind of basic competence. That confidence feels thinner now, more conditional. People increasingly expect disruption before stability. You can almost feel it in the public reaction, not outrage exactly, more exhaustion, a weary recognition that another adjustment is arriving, another system update ordinary people are expected to absorb and understand, and honestly, many are struggling to keep up, particularly older generations who have spent years adapting to digital banking, automated phone systems, disappearing local branches, online verification apps, passwords, security codes, facial recognition checks. Every few years, the rules seem to change again. The thing people are starting to notice is that these changes are often introduced in the language of protection, safety, security, fraud prevention, and of course those concerns are real. Financial scams targeting pensioners have become increasingly sophisticated. Banks argue they are responding to genuine threats. Government officials say stricter verification processes are necessary to prevent criminal activity and safeguard public money. On paper, that sounds difficult to argue against. But there is another side to this conversation as well, because systems designed for maximum security can sometimes become emotionally unforgiving, efficient in theory, complicated in practice, especially for people who are less digitally confident, less mobile, or already anxious about managing finances. A missed verification request, a frozen account pending checks, a technical error during processing. Suddenly, what was designed as protection begins to feel like exclusion. And it is strange because Britain has spent years talking about financial inclusion while simultaneously building systems that can feel increasingly difficult to navigate unless you are technologically fluent: cashless payments, online-only services, AI fraud detection systems, remote identity verification. The pace of change has been remarkable, sometimes impressive, but not everyone experiences that pace in the same way. For some people, it feels less like progress and more like permanent adaptation. I keep coming back to the emotional reality of waiting for a pension payment. For many viewers, perhaps it sounds manageable, inconvenient, certainly, but survivable. Yet for millions of pensioners, these payments are not supplementary income. They are the structure holding daily life together: heating bills, food shopping, medication, rent, small acts of independence. And when people live that close to the financial edge, uncertainty begins affecting far more than bank balances. It affects dignity. There is also a wider political undercurrent here that feels impossible to ignore. Britain is aging. The cost of supporting older populations continues rising. Public services are stretched. Economic growth remains uncertain. And against that backdrop, every administrative change touching pensions becomes politically symbolic, whether governments intend it or not, because pensions are never just about money. They are about the relationship between citizens and the state itself. The conversation seems to be shifting toward a deeper question. What exactly do people believe they are owed after a lifetime of contribution? Not luxury, not endless comfort, just reliability, predictability, the feeling that basic promises will still hold, and perhaps that explains why these stories resonate so strongly. People are not simply reacting to delayed payments, they are reacting to the possibility that stability itself is becoming less dependable. Of course, there are opposing perspectives worth acknowledging fairly. Some economists argue modern banking systems simply cannot operate using outdated methods forever. Fraud losses cost billions, cybercrime evolves constantly, regulators insist stricter checks are unavoidable in a digital economy, and there is truth in that. Many younger people watching this may feel perfectly comfortable with additional verification processes if it means stronger financial security overall. Banks themselves would likely argue they are trapped in an impossible balancing act, move too slowly, and they are accused of failing to protect vulnerable customers from scams, move too aggressively, and they are accused of creating barriers for legitimate users. In many ways, this reflects a broader tension running through modern society. We demand convenience and security simultaneously, even though the two often conflict with each other. And maybe that is the point. Perhaps this story is not really about one banking rule change at all. Perhaps it reveals something larger about the era Britain is entering, an era where efficiency increasingly shapes policy decisions, where automation quietly replaces human discretion, where systems become smarter but not always kinder, more advanced but sometimes less patient with ordinary human complications. There is this growing feeling that many public and financial institutions now operate according to metrics ordinary people never see: risk scores, automated flags, behavioral analysis systems, invisible algorithms making silent decisions behind the scenes. Most of the time, people barely notice until suddenly they do, until a payment pauses, an account freezes, a phone call leads nowhere, and then the machinery becomes visible all at once. What's interesting is how quickly financial anxiety can become emotional anxiety. Money is rarely just money, especially later in life. It becomes tied to autonomy, pride, control, the ability to avoid asking for help. And when pensioners speak about fears surrounding delayed payments, they are often speaking about something deeper than temporary inconvenience. They are speaking about vulnerability, about dependence, about the quiet fear of becoming invisible inside large systems. And honestly, politicians should probably pay closer attention to that emotional dimension, because public trust is not maintained purely through economic statistics or technical reassurances. It is built through lived experience. If people begin associating modernization with stress, confusion, and instability, then confidence gradually erodes even when intentions are reasonable, slowly, quietly, almost imperceptibly at first. There is also a generational aspect to all this that feels important. Younger audiences, raised inside digital ecosystems, often assume adaptability as a basic part of life. Apps update, systems change, passwords reset, but older generations grew up in a culture where institutions prided themselves on consistency. Stability itself was considered a public good. So when procedures constantly evolve, it can feel psychologically disorientating, not merely inconvenient. None of this necessarily means catastrophe is coming. That distinction matters. Britain is not suddenly abandoning pensioners. Payments are not vanishing overnight. Most delays, if they happen, may well be temporary and resolved quickly. But the emotional reaction surrounding this issue tells us something important anyway. It reveals how economically fragile many lives have quietly become beneath the surface of normality. Because beneath every technical policy discussion sits an ordinary person trying to calculate whether they can comfortably get through the week. And I think sometimes political debates lose sight of that reality. Systems are discussed abstractly, efficiency targets dominate conversations, fraud statistics fill reports, yet the lived experience remains intensely personal, waiting beside a kettle for a payment notification to arrive, refreshing a banking app repeatedly, wondering whether to delay buying groceries for another day. That is where stories like this begin to linger in the national imagination, not because they are dramatic in the traditional sense, but because they touch something deeply recognizable: the fear that modern systems are becoming slightly harder to trust, slightly harder to understand, slightly less human than they once felt. And maybe the deeper question is whether societies notice these shifts early enough, whether governments and institutions recognize that confidence, once weakened, is difficult to rebuild, or whether people simply continue adapting quietly, carrying more uncertainty each year without ever fully articulating it. Because in the end, pension payments are about more than administration. They are about whether people still feel securely connected to the country they spent their lives contributing to. And right now, for many watching these changes unfold, that connection feels just a little more fragile than it used to. Perhaps that is why this discussion feels strangely emotional even among people not yet near retirement, because everyone eventually imagines themselves in that position: older, more dependent on systems functioning properly, more aware of how quickly small disruptions can alter daily life. And there is something profoundly revealing about how a society treats people at that stage of life, whether it prioritizes reassurance or merely efficiency, whether it designs systems around human behavior or expects humans to endlessly redesign themselves around systems. The coming years will probably bring even more automation, more digital monitoring, more financial security measures, more invisible layers between institutions and the public. That trajectory seems almost inevitable now, but the challenge for Britain may not simply be building smarter systems, it may be preserving a sense of humanity inside them, because once people stop feeling recognized by the structures surrounding them, the consequences become political, cultural, and deeply personal all at once.